Yo, what's up, trader? This is your boy, the rugged trader. If you have been getting wicked out of the market, then this strategy is about to change your game. Today, I'm dropping my weekly wick zone strategy. It is a high profitable entering technique you can use on the forex, the crypto, the indices, and even in the stock market. The strategy is so simple that it is very raw and highly accurate. So without much ado, let's get started. Step number one is to mark the weekly wick zone. You must look at the recent weekly candle to identify if it is bullish or if it is bearish. As you can see, I have identified that this current candle is bearish. Now, if the weekly candle is bullish, we highlight the lower wick as a demand zone. But if it is bearish, as you can see, we highlight the upper wick as a supply zone. This wick that we highlighted, that is where the big boys, the institution, left unfilled orders. So we are marking it out so we can hunt with them later on within the week. Okay, now here is where we trade smart. Only mark the zone if the wick you are using is significantly larger than the opposite wick. Now, for a bearish candle, as you can see, the upper wick is much bigger than the lower wick, and that is why we consider this particular supply zone significant. Now, that wick shows that there were a lot of sell pressure from that particular zone. So next time when price return into that zone, we're expecting that there will be a reaction, a significant one at that will push the market downwards. That is why this zone was marked. Now, in the next step, we are going to switch to the 15 minutes time frame. Some people might prefer the 5 minutes time frame. It is all to you, the one you want, whether the 15 minutes or the 5 minutes. For me, I'm going to go with the 15 minutes time frame. We are in the 15 minutes time frame. We wait for price to return back to the zone during the week. Now, if the weekly zone is so wide, we can actually refine it in this 15-minute structure. But notwithstanding, let's wait and see what happens when price gets to the zone. Now that price is in the zone, we wait for change of character. We don't blindly sell because price entered the zone. Most people will blindly sell or buy because price has entered into the zone. When you do that, you are going to accumulate a lot of losses. But at this point, we are going to wait for a change of character to confirm that the market has taken a new direction. So we have drawn a line showing us that yes, we are waiting for that structure to be broken to the downside. And immediately we get that confirmation, we know that the market is ready to head towards the downside. So we wait for what happens next. So as you can see, the market has changed character. There is a change in character. The market has broken down. Now it's showing us that yes, it is ready to go down. Then we can look for any ICT concept, whether be it fair value gap, order block, whatever it is, for us to take our trade. Okay, so we have placed our order, waiting for the market to take us in. So we put our stop loss at the protected high over here, and then we go for 1:2. You can actually go for 1:2 or 1:3 depending on your preferences. But when you key into this, you are going to make lot and lot of money. Now listen closely. If price doesn't return to this zone by the end of the current week, the zone becomes invalid. We don't carry zone forward forever. Fresh weekly action, fresh data. So have that at the back of your mind. So as you can see, price took us into this trade and boom, we're in profit. 1:2, 1:3 cleared. So that is how we use this weekly zone to make money from the forex market. We are going to show you more examples, one or two examples, so you can confirm how authentic this strategy is. Now, if you adopt this strategy, even as someone who is doing 5 to 8 jobs, doing working and also trying to use forex trading as a side hustle, you will have sufficient time, to yourself instead of stocking yourself with the chart. This strategy works because it follows what the big players are doing, the institutions, the banks, the hedge funds. Now, the weekly candle reflects their momentum, and the zones are spots they likely left open orders. Now, we are not chasing price, we are aligning with the whales, and that is why this is so rugged. I'm going to show you further examples to confirm this. Same Euro USD the following week, you can see what actually played out. The last week played out very well, and now we are in a new week, so we are going to actually prove this strategy further. So, like I said, the first thing is to draw our rectangle on the week. Okay, we have marked our other block. Now we shift to the 15 minutes time frame. In the 15 minutes time frame, we wait for price to get into our zone. So price got into the zone and gave us a change of character. So we are ready to take our trade. And as you can see, there is a huge fair value gap and also an order block. So we go ahead to place our trade. We have entered into the trade. We are in the market already. And boom, take profit level reached. Guys, I can go on and on to confirm to you the authenticity of this strategy. So if this strategy makes sense to you, you can, and you are tired of overcomplicating things, you can drop a like, you can hit the subscribe button, and you can leave your comment in the comments below.